Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live rates for some different programs, and then we're going to be doing a deep dive into short-term rental property loans. Great topic here for today. Give us just a second here to go live on all the different platforms. We've got the chat up on the screen. Feel free to drop a comment there in the chat as you tune in. You can also drop any questions you have in the chat as we go through the deep dive here a little bit later on. Happy Friday to everyone. And it looks like we're live on all the different platforms, so we can go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat, drop any questions you have in the chat, and we can answer them for you. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live rates for some of our different loan programs. Then we do a deep dive into a different loan topic. And today's topic is going to be short-term rental property loans, something that we do a lot of here at the Mortgage Calculator because we specialize in non-QM loans and working with real estate investors. So Jose will take us into a deep dive shortly, but before we do that, we're going to pull up the live rates. So Nick, if you're ready, let's go ahead and pull up the rates for today and see what they are looking
like. All right. So it looks pretty positive all around, not much change, but looking good here. So we will compare our rates for today. It is June 14th, just after 11 a.m. All of our standard rates are live here. We'll compare them on the same screen across the APRs for each. So we will set up the same scenario for all of the different estimates here. We'll set up a standard single family home. We'll set up a $500,000 purchase price, $400,000 loan amount. That corresponds to 80 loan to value, 20% down payment. And we'll set everything with a 760 credit score and an estimated 40% debt to income ratio. And then when we get to the DSCR, I will explain the values there. This will allow us to compare the APRs across the program. And if you would like a full breakdown, an itemized loan estimate that itemizes all the fees that go into the APR, please get with our team. We have over 300 licensed loan officers. Let me go ahead and share my screen today so we can compare. So for today, our first option up, the first option we always look at, typical loan that most people consider, 30-year fixed conventional primary, as typically the first option for most borrowers looking for a new primary home. Rates today come in at 6.49. Final APR 6.802, just a touch lower than yesterday, which is always welcome. Now, if for any reason our customer doesn't qualify for a conventional option, typically the next option we want to present is an FHA option. FHA allows more leniency on credit issues, as well as a much higher debt to income ratio, but does have upfront and yearly mortgage insurance. FHA comes in today at 5.625 rate. Final APR with all of the mortgage insurance costs, 6.594. So notice if our customer qualifies for both, FHA could be a touch cheaper, but it does require the MI. And our customers that need to use FHA, definitely a welcome sight, as it is very comparable to the conventional costs here. Now moving on to our VA options. VA is only for our eligible vets and active service members. If you are eligible, these programs are amazing. Rates today come in at 5.75. Final APR just a touch above 6 still, 6.067. Notice this smokes FHA and conventional. Definitely a great benefit for all of our vets out there. And the final government program here is our USDA option. Remember, USDA is only for properties that are in USDA eligible areas, the rural areas of the country. So if our borrower and the property are eligible, these are great options. Rates as low as 5.375, and the final APR with all the fees, 6.113. So notice our customers shopping in these rural areas will probably be comparing an FHA option, which is a little bit higher APR, as well as a conventional. So if the property and the borrower is USDA eligible, these are great programs. Now, that is the end of our agency government options. Most banks or lenders only have these 4 options, but that's where we love to present our 5,000 additional options here that we'll start going through. So if our customer doesn't qualify for any of these standard options, other banks or lenders will have to deny them. That's where we can start exploring other options. First up, 30-year fixed non-QM alt doc for a primary home. So if our borrower doesn't qualify for conventional or FHA, any of these options, they may need to use alternative documents. This includes bank statement loans, 1099 loans, asset related loans, all kinds of different programs that we have. We've gone over them this week, actually, on a few of those. Today, to use alt docs such as bank statement, rates come in at 6.875. So remember, earlier this week, I said the non-QM was going to come down slowly throughout the week. Here we are on Friday, exactly as predicted. Much lower rate, 6.875. Final APR, 7.216. Notice we're back within half a point of conventional. So non-QM, as we explained, takes a couple days to react. The conventional and FHA and all the other standard programs react almost instantly to the news. Here we see that non-QM slowly has come down and is now well within half a point of conventional. So just as expected, absolutely amazing. Great option for our borrowers that need to use alt docs. Now moving on to our investors. Tons of options for investors. First up for an investment property is our non-QM alt doc again. Bank statement or similar. Rates come in at 7.375 for investment property. Final APR 7.867. This hasn't dropped much from the other day. So again, hopefully we see some new rates for non-QM throughout next week since we're at the end of this week. Now moving on to our conventional option for investments. Remember, government programs, USDA, VA, FHA do not work for investments, but we do have conventional options. So to use a conventional program, 30-year fixed conventional for an investment property, rates come in today 7.25, final APR 7.597. So again, because conventional reacts quickly, this has dropped. I expect the non-QM to come down a little bit as well, more in line. Now moving on though to our favorite program for investment properties, our DSCR option. No income, no employment required. We simply use the estimated rents from the appraisal to determine a DSCR value. For our demos here today, we're going to put a DSCR value of 1.5, meaning anything over 1 is a property that cash flows. The rents can cover the expenses. 1.5 would be a property that cash flows strongly. So we use that for our demo so we can see all the programs. First up is our 3-year prepayment option. Rates as low as 7% today. Final APR 7.342. Blows conventional out of the water. Absolutely amazing. DSCR is definitely preferred by most investors. Would even take a DSCR option at a higher rate, and it actually beats conventional. Absolutely amazing. Moving on to our 5-year prepay. Some programs allow a 5-year prepayment penalty to sweeten the deal even more. Absolutely smoking. 6.75 rate today. Final APR 7.059. Absolutely amazing. And our final DSCR option, some investors don't want a prepayment penalty or some states don't allow it. We do have options for that. Rates as low as 7.625. Final APR comes in at 7.973. So this is still just a touch above conventional. I would still say 100% of investors would take a DSCR option over a conventional option when it's well within the cost, even with the no prepay. And the investors that are willing to add a prepayment penalty, the deal gets even better. So I usually recommend all of our customers check these programs out to sweeten the deal. And our last couple non-QM options, very popular these days, second mortgages. A lot of customers have a low rate first mortgage, don't necessarily want to refinance their first mortgage, but they need some cash. So a 30-year fixed second mortgage to get cash out of a primary home without touching the first mortgage. Rates come in as low as 8.75, final APR 9.204. This will beat all of the HELOC and adjustable rate options. So a fixed rate second mortgage is a great option get cash out, and these programs are non-QM, so they do allow bank statements and other alt docs. And the same program, 30-year fixed cash out, second mortgage for an investment property. Rates come in as low as 9.875, final APR 10.207. Great option for our investors that need to get some cash out, but may have a low rate first mortgage they don't want to touch. So those are amazing options. Let me switch our screens here. We'll get back into today's topic, short-term rental property loans. So again, we don't get to do these special property types and these special loan types when we do the live demo. These are our general programs for a basic setup. Now we have Jose is going to go into our DSCR and maybe some other options that allow for short-term rental properties, Airbnb, short-term rentals, condotels. We did an episode on the other day. This is probably not the same set, right? Condotels have a different set of problems. We're talking about general short-term rental properties, very popular these days. I would say a good percentage, well over half of our investors are typically looking for some sort of short-term rental exit. So not only is it a popular topic, it's actually probably making up over 50% of our DSCR loan applications. So very popular these days. Definitely recommend all of our team and investors check these programs out. So Jose, let's check out what we got.
All right. Good morning, everybody. Thank you for joining us for our daily mortgage rates live with the mortgage calculator. This is a great segue as we just recently completed our how to structure short-term rental property loans. So definitely look into that for some additional insight on what we're going to talk about today, actually, what we talked about last night. So definitely the short-term rental property loans is one of the sectors that we excel at the mortgage calculator, and it is one of the sectors that has the most momentum, I think, in the financing as well as the real estate side. We see the investors scooping up multiple properties so that they can operate them as short-term rentals, because 9 times out of 10 they're going to make a higher return on their investment, the ROI. The cap rates could be double what they are for a long-term rent, with additional benefits like never have to, usually at least don't have to worry about evicting a non-paying tenant, because there is no lease, no long-term lease in place. So there is no long-term lease tenant protections that could cause the landlord to sit there with a non-paying tenant for months and months and months while they process the eviction on that tenant. So that's the side we may not normally hear about, but that's definitely an underlying factor. But the main momentum here is the higher ROI and greater flexibility that it gives the investor with the property. So let's get right into our examples here. We love using the DSCR loans for meeting the needs of the short-term rental investor due to all of the flexibilities that the DSCR loans offer. Like, for example, using AirDNA to qualify the borrower, using long-term rent to qualify the borrower, using revenue reports from short-term rental platforms like Airbnb, VRBO, HomeAway, Booking.com to qualify the borrower, using last 12 months bank statements of short-term rental deposits to qualify the borrower. Now these can be done for purchases as well. The revenue reports and the bank statements, should the seller share that documentation. Obviously, if the property is already being operated as a short-term rental as well. And we even have options from the DSCR where you can use long-term rent on a refi, for example, or short-term rent, or whatever you decide to use, 1007 lease or short-term rental income, any of those three, without the need to provide a lease. So whatever income works out that's put on the 1007, you're not going to get dinged for not having a lease in some cases. That's LTV reductions and all that, or maybe not even do the loan at all. So again, great flexibility with the DSCR. So our first option here is using long-term rent to qualify with only 15% down, the DSCR Unicorn, the 85% LTV loan option. Here we have lowest cost option is at 8.125% rate at a cost of 1.4 points. You can buy that down all the way to 7.25 at a cost of 3.275 points. That's very amazing for a DSCR loan or investment property loan in general. Next option here now is using AirDNA. Now, AirDNA is a database that has short-term rental comparables. That's an Airbnb service, hence AirDNA, right? The only I guess catch, quote unquote, with this option is that your DSCR does have to be 1.5 or above to be able to use the option that does not have an LTV adjustment, right? So in this case, 80% LTV is the max here, and look at these rates. Totally amazing. 7.375 at par, and you can buy that down to 6.375 at a cost of 3.4 points. What were you saying, Nick? There was going to be a dip in the non-QM? For sure. Look at them apples. This is 80% LTV using AirDNA. Now, using short-term rental revenue reports, same option. They let you use AirDNA or short-term rental revenue reports without any loan level price adjustments. So again, same rate, 7.375 at par. and you can buy that down to 6.375 at a cost of 3.4 points. And now this is one of the twists and tweaks that we do with DSCR. This is when you do not have AirDNA comps available, when you do not have short-term rental revenue reports or bank statements from the seller available, but they still want the property. It's a great property. I guess we'd call this a trophy property. They know they're going to make the money. They just need to close on the loan. You need to buy it. So here with 25% down at a 75% LTV, we can do the 0.75 to 0.99 DSCR option and use the long-term rent to qualify the borrower. So again, even though we are not cash flowing above 1.0, we still have 8.375 at par, and you can buy that down all the way to 6.875 for a DSCR option. We call this our low ratio, 0.75 to 0.99 option. And now for our no ratio, less than 0.75. This one's really not cash flowing, close to 1.0, but still with only 25% down, we will fund that loan. 9.249 is at par, lowest cost option. 7.624 at a cost of 3.15 is our lowest rate option. And now for some similar tweaks and twists with our cash outs. So we can use the same low ratio 0.75 to 0.99 option as a cash out for our short-term rental. Keep in mind now the following in this particular scenario with this particular option that I'm talking about on a refi, where you're not going to be asked for a lease. A lease is not a requirement. In some of the other options where they accept short-term rental in lieu of a lease, right, the catch, then they throw some additional hoops of fire that you have to jump into. And most of the time, it's also going to equal a 5% LTV reduction if you're specifically using short-term rental income to qualify. In this scenario, no hit because you're technically not using short-term rental, even though you have operating the property as a short-term rental. You're not using short-term rental. You don't have to provide a lease. All you need to do is provide the appraisal with a 1007 with whatever method chosen. In this case, I'm choosing the 0.75 to 0.99 option. Maybe there were we don't have the short-term rental revenue reports. Maybe we haven't been doing it for 12 months. So the short-term rental revenue reports would not be usable in most cases. In some options, maybe you can get in with 8 or 9 months, but most of the time, average it out over 12 too on top of that. But in this case, best option for us would be using this option, which still lets us go to 75% LTV. If you remember, that's the same LTV as for a purchase for this same 0.75 to 0.99 ratio option. So why try to jump through hoops of fire when you can just use the low ratio DSCR option and still get these amazing rates, 8.99 at par, and buying it down all the way to 7.125, right? Those are great options there for our low ratio DSCR. And now our no ratio DSCR for a cash out, same situation, right? But now we have our DSCR below 0.75. So we still have great options. 9.249 is at par. So it went up a little bit from our 8.99. Also, our LTV is 70 instead of 75. And we can still buy it down to 7.624 at a cost of 3.15. But wait, there's more. Now, this is the nice little twist here that I'm giving to you guys. Nice little nugget of knowledge here is cash out refi using AirDNA. Yes, you heard me correctly. We do have an option for if the property was recently put into service, either because, either because you just purchased it and renovated it, for example. That's usually going to be the best reason. Or you've owned it for a while and you just completed a major renovation and now you're putting it back to work as a short-term rental, fully furnished and all that good stuff. Those could be acceptable reasons to be able to use AirDNA to qualify your cash out refi. You heard me correctly. Use AirDNA to qualify your cash out refi. 75% LTV option here, and 7.999 lowest cost option, and you can buy that down to 6.999. Pretty amazing. And here, our last option is the simplest one, using the long-term rent to qualify at a regular DSCR option. This is going to be the similar one that I gave you at a low and no ratio, where no lease is required. Just have the 1007 with the income, your 1007 long-term rent market study. As long as you provide that, no lease required, no short-term rental reports, nothing is required other than the 1007, because it's either 1007 or lease or short-term rental income documentation. So obviously, if our long-term rent qualifies us at a 75% LTV, then we're going to get these options of 7.99 lowest cost option at par, and you can buy that down all the way to 6.75 at a cost of 3.15. So see, it's all about reading into the guidelines, interpreting the guidelines, and then properly structuring your loan and selecting the most appropriate option to make sure that your loan starts off on the correct trajectory. Because once that loan starts off on the incorrect trajectory, the longer you wait, the farther off target you are, the harder it's going to be to get that loan back on track in time to be able to pivot and save the deal. So the solution to this is, don't get off on the wrong foot from the beginning. Make sure that you reach out for structure assistance if you're an MLO, or make sure you reach out to one of the loan consultants at the Mortgage Calculator if you're one of our borrowers out there listening to our podcast. And thank you, everybody, for listening.
All right. Thank you, Jose. I don't see any questions here. So, great topic, though. Definitely, again, something that we specialize in here at the Mortgage Calculator. So as Jose said, make sure to get in touch for some more information. We'll connect you with one of our 300 loan officers across the country. So remember, we do this show at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. So we will be back next week with some new topics. We appreciate everybody tuning in, and we'll see you Monday, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage